Now, portfolio investment in Africa is expected to increase by 30% to $26.2 billion by the end of 2013, with Nigeria receiving a chunk of that inflow. Now, that's according to the African Development Bank, the AFDB. Now, in West Africa, the stock markets have put together an impressive run so far this year. Which of these bourses is the biggest bargain now? For a look at prospects for the markets, the Chief Investment Officer at Duet, Victor Ayo Salami, joins me now from London. Ayo, thank you so much for taking the time out to join us. Now, we've seen an impressive run by African stock markets, particularly here in West Africa, and there have been a couple of winners so far. Now, in your opinion, which of these markets have the best combination of value and growth?
In terms of value and growth, I don't think we have to, I mean, it's now become a stock selection market or an environment at the moment. Because when you look across these markets, you can't sort of just aggregate them as one market offering particular value. Nigeria has value, but you have to look for it. We think that's more in the banking sector relative to the consumer sector. But when you look at a market like the BRVM, I think some of the consumer stocks in the BRVM still offer value. Things like Solibra would be the kind of things that we would be looking at. When you look at Ghana, we think the banking stocks in Ghana are still attractive. So we are not. I mean, at this stage, we are not making top-down calls. We are not calling individual markets. We're actually looking at specific sectors, specific stocks, to see whether the story stacks up. Because for Nigeria, for instance, while the consumer companies in Nigeria continue to do well in terms of their earnings outlook, we would find their valuations to be quite rich, and so we are not in that segment. But within the banking sector, especially among the second-tier banks in Nigeria, we think we see value there. So for West Africa, I think it's not a top-down call. It's more sector-specific, stock-specific type of stories.
Okay, Aya, let's go into specifics now and look at how the story stacks up. Like you say, let's take a look at Ghana. Over 73, right now as I speak, year-to-date return for the Ghana equities market stands at 73.8%. Now, that's quite interesting looking at all that's been going on in the macroeconomic environment in Ghana. We're looking at inflation at the highest so far over 5 years. We're looking at, of course, utility bills rising. We're looking at consumer spending, a threat to consumer spending. Yet, we're looking at the banking stocks remaining a favorite on the bourse, pushing the index, still the best performing on the African continent. For you, what has been the supporting factor for this market?
There is undoubtedly the Ghanaian economy faces some significant macroeconomic headwinds. The primary one being the government deficit, and that's what's driving everything else. The government deficit this year, although the budget is for estimates that it would be around negative 7% of GDP, we don't think they will be able to do that. And yesterday Fitch downgraded Ghana's ratings on account of the size of the deficit. But what the deficit has done is that it has tightened the monetary policy environment, and the Bank of Ghana is basically making the Ghanaian government pay for its fiscal profligacy, and so rates are very high. And so while TBO rates are very high in Ghana, the Ghanaian banks are their spreads are extremely large, and that is what is driving their profitability. Whereas the real economy in Ghana, the domestic consumption is under pressure because of the tight monetary policy environment. We think that will probably ease going forward. This year will be difficult for Ghanaian consumers, possibly even next year. But by the end of, as we go into next year, we think oil revenues will become more robust. That will give the government the room to be able to start cutting the deficit, making significant reductions to that deficit. And at that point, we will probably see a recovery we would see the monetary policy environment weaken or slacken, and that would give a boost to consumer spending. So within Ghana, the consumer stocks, the real economy is definitely under pressure. But the yield play for the banks is what's driving their earnings. And in an environment where banks are still able to get 22% yield on short-term bills, then it's a no-brainer investing in that sector. But the broader economy is only really going to grow when we see the government do something serious about the deficit. The critical thing to do about the deficit would, of course, be to tackle public sector wages, but that is politically inconvenient. So we will probably have to wait for the revenue side to take the kick. And that is really only going to come in when petrodollars, when the revenues from oil exports begin to be more robust. So the headwinds are there. But we overall, we still think if one were taking a 3 to 5 year view, there are positive things which are likely to happen in Ghana, which give us confidence in the underlying fundamentals of that economy, notwithstanding the current challenges that the fiscal deficit poses for the macro.
Sorry to butt in. Let's quickly talk about Nigeria specifics. Also, the All-Share Index has returned over 32.6% year to date so far. We've seen the Nigerian market have one of its best runs so far, 40% sometime in June, and it looks like, of course, investors still having their eyes on bank stocks, consumer goods stocks, and of course industrial stocks. Now, for you, where do you continue to see value? Remember also that we've had some headwinds here. Also, that cash reserve is 50% cash reserve requirement on the public sector funds for banks. That also created some headwinds for the market. And of course, we're having the Q3 numbers just around the corner. That could be a make or break, as it were, for the market. But for you, what are your prospects? What's your outlook for how this will all play out in the market going forward?
Nigeria's had a very good run this year, and the underlying dynamics has been that we've seen retail investors come back into the market off the back of the good performance last year, and also significant foreign new inflows. Significant portfolio flows have come from foreign investors. The banking sector undoubtedly faces regulatory headwinds. The 50% increasing in public sector capital reserve ratio requirement. But we see this as temporary. The sector will ride it out. The banks will typically, in Nigeria, we might see 1 quarter or 2 quarters while this will have an impact on their earnings, but they will adjust. Primarily, they will adjust either by repricing their loan book or by increasing the charges for their services. So the regulatory headwinds that the sector faces does not, in our view, pose and does not undermine the fundamental investment case for investing in Nigerian banks, which is purely driven by valuation. You have to put Nigerian banks in the context of their global banking peers. And with an average price-to-book ratio of about 1.3, when you consider that banks in Indonesia and Malaysia are trading on about 1.8 times book, we think Nigerian banks still offer value. Third-term earnings we are not expecting any fireworks. We think it will probably be disappointing, but any depression in bank prices as a result of third-term earnings, we would see that as a catalyst to accumulate into the sector. Among the consumers, it becomes an issue of very specific themes and specific place.
I just want to squeeze one more. I just want to squeeze one more question in.
The consumer sector is UAC. Yeah, please do.
Okay, Ayo, just to squeeze in one more question. Sorry, there's about a couple of seconds of delay between your line and my line. Just to squeeze in one more question. If I were a foreign portfolio investor and I'm looking to invest in the West African equities market, and I'm looking at a list of 4 top winners, as it were, so far, the BRVM, Ghana, Nigeria, Zambia. Now, where would you say, which of these equities markets would you say would be a good or the best bargain for me? I know you talked about specifics, looking at sectors individually, but off the cuff, though, what would you recommend for me?
If I'm making a top-down call, I'll make the top-down call on the BRVM. It's been the one that has been that has seen the least push. And so if you are looking for value stocks, that is probably the market where you will find the concentration. A lot of these stocks, they are banks, they are agricultural companies, and some of the consumer stocks there are still providing dividend yields which are in the 7% range. Now, to find a brewery in Africa, like Solibra, which is where the dividend yield is close to 7%, it's now rare. Well, because the Guinnesses and the Heineken, Nigerian breweries, their dividend yield numbers have dropped down to around 2, even below 2%. So if I had to make a top-down call as a foreign investor, it would probably be to look at the BRVM. Although I would have to be conscious and tag that with the fact that liquidity is a challenge in these markets, and you really have to take patience and time to build your positions.
All right, thank you so much, Ayo, for sharing your thoughts with us and giving us more perspective on the outlook prospects for West Africa.